I love this comment. And I love this comment because it makes my point while thinking that they are directly contradicting the point I was making. So let's break this down. Alder says they being businesses, charge what the market will bear above and beyond cost plus a margin. What self respecting company would leave money on the table? Completely agree. But what we are talking about here is whether corporate income taxes will actually cause prices to rise, as we've been told. We can't raise taxes on our corporations because if we do, they will just tack that cost onto the consumer, raising prices further, causing more inflation. But here's the thing, we're all familiar with this very basic graph. This is your Econ 101 supply and demand graph, right? Price depicted on the vertical axis, supply and demand depicted on the horizontal axis as red and blue lines. As demand is very high and supply is very low, price goes up. As supply is very high and demand is very low, price goes down. Where they meet in the middle is considered the quote unquote market price. Now, look, we know this chart's theoretical, right? In the real world, there's a whole number of things that go into pricing beyond just supply and demand. And even the chart itself could be manipulated if you flatten or steepen any one of these lines. But the point is, when a company finds an equilibrium where they can sell the goods that they want to sell at the price they want to sell it at, that's the market price. And if we tax the profits, which are built into that market price, a little bit more and they want to try and recoup that without changing the amount that they make, they either have an issue where they have a bunch of goods that they aren't going to sell because the price goes too high, which isn't appealing to shareholders, or they start producing less and charging a higher price, creating artificial demand, which also isn't appealing to shareholders because now you have a shrinking business. Now, look, if you want a real world example of what I'm talking about, just look at that period of time in the US from 2017 to 2018, known as the Great Price Reduction, which coincided with us passing the Tax Cut and Jobs Act of 2017, in which we lowered the US corporate income tax rate from 35% to 21%, and prices fell precipitously as companies passed on all those tax savings to us. Wait, that didn't happen, did it? So why are we so sure if companies aren't passing on all their tax savings to us, why are we so sure that they're going to pass on all of their expenses with an increased tax onto us? It doesn't make a whole lot of sense, does it?